Hello friends, welcome to our channel. My name is Vitalis Gimbetor and I am a professional trader and one of the creators of the MATHBOT trading algorithm. MATHBOT is a trading algorithm that has been delivering stable results for 17 years now, generating a monthly profit of about 4, 5, 6 or even 7% completely automatically without any human intervention. In this video, I want to talk to you about what is happening in the financial markets, and under no circumstances should anything I say be taken as financial advice. Consider this as educational material that may help you better understand or at least grasp my perspective on what is happening in the market and how I plan to act. So let's not waste any time and get started right away. Since we primarily and extensively specialize in the precious metal gold, I always want to commence our discussion with gold, as is indeed the case in this particular instance, because gold is unequivocally our principal and most significant trading asset, the very commodity we diligently and consistently trade on a daily basis every single day. Take a look at what's happening. It's abundantly clear that the precious metal gold has been in a significant and sustained uptrend for quite an extended period of time now. And it's obvious that up to now, there hasn't really been any significant correction, especially starting from 2024. If we set this period here, then from 2024 or even from the end of 2023, from October 2023 to today, nothing has really happened. So it's almost going to be 2 full years soon. And what does this mean? Any asset sooner or later always goes through a correction. In other words, it's inevitable. A correction always happens. Take note, even in the past when this happened, you can see what kind of corrections the asset made. And in the past, these corrections reached 18% and sometimes even more than 20%. You see, in this case, it's 22%. So same fate is very likely to await gold in the next few months. That is maybe not right now, maybe not immediately, but this entire cycle has to go through a correction. This is a Dow Jones theory. It's a rule of the market. Whether we want it or not, it will happen anyway. Okay? So this process might come a bit later, it might come a bit earlier due to some geopolitical factors, but sooner or later it will happen anyway. So let's take a look at what I expect from gold over, say, the next few days. Well, let's start with the basics. The main thing is that gold is currently in this sideways channel, right? So this is the sideways channel where gold has found its place and stopped. It's stuck in this channel. Okay, so breaking out of this channel will set a new trend for the next several months. Therefore, as long as we remain in this channel, there may be false breakouts. But it's still very important that we hold this breakout. Now, understanding that we are globally in this channel, we can find, I'll leave it for now, find this kind of scenario here. First of all, if we look at the fractals, this fractal let me remove this upper channel for now. So in this case, this is a fractal and it's a strong upward fractal, provided that it plays out. Yes, we always need to understand it's true that gold should correct, yes, but we also see here a certain pattern, a certain fractal that has formed, and with a high probability, if it breaks out, we could see a new all-time high. That is what the maximum will be. In this case, we don't know, but we can only anticipate that if a breakout occurs, we might see the level of 3,544 or even higher. It's too early to talk about that now. We'll act according to the situation. But even if we break through this trend line, the first stop will probably be the upper boundary. That is the boundary of previous historical highs. Okay? Next, we see the lower boundaries, meaning this is a sideways channel. We also see that here an upward movement is forming, you see, where the asset is making higher lows. What is important to consider here now? So what is important to take into account? What is important to understand? We must always remain rational. This crucial information is absolutely essential to fully understand on a truly global scale what to realistically expect from the asset's behavior. However, considering the global market dynamics, the asset could potentially do something quite significant, like dramatically come up here with a strong upward trend, correct? And then subsequently go down with a noticeable decline. We don't know that. And I never said that we are definitely going up. I said that this fractal indicates that we are more likely to go up. But if the situation changes and we see something like this, then of course it will be a completely different story. In this case, the entire structure changes. So let's address everything as the situation develops. What do you need to understand? You need to understand two important levels. That's it. This trend line and the lower trend line. Now let's take a look. The moving averages for 21, 50, and 100 periods on the daily time frame. So you can see that on the daily time frame for the 50 and 100 periods, we are right at this boundary. So this is a very important level right now where we are. In other words, where we are right now is mega important, because these levels will serve as the main support for the asset in case of any growth. And if a correction happens later, this will be the key level. Similarly, if we break below these levels, which also coincides with the trend line, and we'll be heading downward. So right now we're at a point where a gold price impulse should occur. It's very important that there will be an impulse. Moving on, the 100 period level is the lower boundary, where the asset will find its first target if it breaks downward. This has happened before. It's not the first time. You can see, for example, here, here, and here. So it's an important level that needs to be taken into account. For now, I'll set this level as the global target in case of a short, and as I mentioned, around 550, and this level as a target in case of growth, roughly to the upside. Also, if you measure the length of the triangle, it will be about the same, give or take. You see, I even set it more conservatively. Here, it's very conservative overall, but if we set 200 periods here, most likely it will be here as well. So for now, I don't want to change anything. Okay, let's move on to the 12-hour chart. You see, on the 12-hour chart, all the moving averages are just sitting at this level. This is all on the 12-hour chart. That is, all the moving averages are on the 12-hour chart. This is very unusual and really cool. Let's go to the 4-hour chart. The 4-hour chart is what will allow us to trade over the next few days. Over the next few days, considering the moving averages, we are above them. I don't usually trade based on moving averages, but in this case, I wanted to show them to you. Now I'm removing everything. And what am I interested to know? Yes, we know that this level is very strong, but pay attention to the next factor on the 4-hour chart. Here is the next factor we have. This is a fractal, and it coincides with this trend line. For now, I'll remove the trend line, since they coincide anyway. I'll remove it down here as well. This is a fractal, and it's a very strong upward fractal. So this fractal is very strong, and only if it breaks upwards, it can at least reach this target, meaning it could break the previous historical high, the one that was here. Be careful with this fractal. By the way, this is very important. But at the same time, notice that every time the asset approaches this fractal, it bounces off, but each time the bounce gets smaller and smaller. In other words, it's pressing up against it. So in this case, this pressure is a strong signal for growth, right? So this strong signal for growth, those who know how to trade well will be able to take full advantage of it. In fact, we have a global trend line which is descending, and we've hit this line. Next, we have this fractal or this particular pattern. And what do I want to show? I want to show Fibonacci as well. And also notice that the 0.618 level also coincides at this point. So there are a lot of important levels here, and breaking through this level will push the price upward. This is extremely important. Now, all these signals were for a long position. Now, as traders, we must always stay alert and keep watching. So what is trading? It's working with probabilities. In this case, we need to examine the situation from all perspectives. Of course, in my current view, I see, for example, a 70% chance that a breakout will happen to the upside. But is there a chance that a breakout could happen to the downside? Of course. If I observe a certain particular pattern that doesn't occur very often in the financial markets, and this specific pattern is indeed triggered if we make a new significant low here, then the ultimate target, at the very least for this particular pattern, if it successfully works out, is approximately at the 3,244 level, provided that we do it, that is, we come back and test this low. That's why, for example, the risk to reward condition here is very much in your favor, considering that if the market goes down, you only need to set a small stop loss and can capture the entire move. Of course, we don't know the future. The market can play a trick on us. It can behave in many different ways. But it's also important to understand that the asset could rise even higher before correcting. There are a lot of nuances here. So, in my opinion, the likelihood of us going short is quite low, but in no case should we completely dismiss this scenario. What else is important? For me, oscillators are also important. Overall, oscillators, for example, daily or short-term ones, aren't that important in this case. But what worries me is that the weekly time frame has lost a lot of cycles. This is the weekly time frame. Of course, this means that when it starts to reverse, there will be a very long, drawn-out decline, yes, because that's what happens when it loses a cycle. We also have a divergence here, which is really obvious. You can see what a divergence it is on the weekly time frame. But at the same time, the price is going up. That's a strong signal for a short. Now, as for gold, at the moment, anything above 4 hours or below 4 hours, I won't be considering those time frames. So, well, obviously, you can see that we had a breakout here. So, in fact, we are currently in a clear and established uptrend on the 4-hour chart, which is a significant development. This is a walking time frame. That's why I would even say not 70, but maybe even 80% chance that we're expecting a strong upward move. Let's move on. Silver. What's going on with silver? With silver, it's pretty much the same situation as with gold. But while you can look for a short entry on gold, I wouldn't short silver, because silver is an asset that has been holding back its growth for a very long time. You see, it has just broken through its trend. Look at how it's starting to take off. So opening shorts on silver, in my opinion, I won't do that. But with silver, if we switch to a shorter time frame, for example, 4 hours, I would consider long positions, limit buy orders for longs. So when considering limit orders, if we meticulously add the very same moving averages on the daily time frame and also diligently apply the powerful Fibonacci retracement levels, all these precisely identified zones become truly excellent and opportune spots to strategically buy more physical silver. It's quite likely that if gold undergoes a significant correction in a few months, silver will correct along with it, and quite strongly at that. But we don't know when gold will start its correction. Maybe if gold begins to correct in 2 months, silver will already be at $50, and then the correction will happen, of course. All of this is possible. Right now, we need to assess the situation based on the current parameters. That's why I don't see a short position on silver. In my opinion, it's much better to set some limit orders to catch movements like these, for example, as we saw here and here, because silver has this feature, it can sometimes make sharp corrections, and that's when you can enter the market. Let's move on now to the next topic, Bitcoin. Bitcoin has reached a new all-time high. That's the general picture. I have nothing more to add about Bitcoin here. As I see it, its target is around 130. Why? Because there's a certain thread, a certain pattern here. This pattern should close, well, if we take a conservative approach, at about the 130,000 level. So I don't really have anything else to add about Bitcoin here. Yes, there may be correction phases while it's growing, but overall that's the target. Right now, shorting Bitcoin, be careful, makes absolutely no sense. In my opinion, it's better to wait for a clearer reversal signal and only then consider shorting. Shorting now is just complete nonsense. Ethereum. Ethereum, of course, is lagging far, far behind its brother Bitcoin. What's important here? Just like Bitcoin after a long decline, Ethereum is now showing some signs of growth. But these signals aren't exactly the ones we'd like to see. Yes, of course, we'd love to see Ethereum at 4,000, 5,000, and so on. But for now, the current situation is such that we just have to patiently wait. Wait for what exactly? That is, if after this significant movement, there's the crucial phase where you can potentially buy more Ethereum, perhaps at a more favorable price point. Of course, it would be great if we saw an accumulation phase here and then another impulse upward. You see, where are the important levels? We have important levels. I'll place Fibonacci at the key levels. You see that Ethereum has hit the 0.61 level. This is a very important level. The next key level is around 3,500 to 3,560 because it could rise to this point if a breakout happens. Of course, it would be great to see that, and accordingly, only after some kind of breakout above the all-time high can we say that Ethereum, even if not the all-time high, at least this previous high has come back, and that further growth could happen. For now, what's happening is just a pullback from this drop. There's no new trend here yet. So we are still in this trend. Here's the trend, and here's the pullback. And this pullback will only turn into a new trend if Ethereum rises higher and consolidates there. What does it mean to consolidate? He'll rise up here and form a certain structure. This right here, that would be a new trend. Right now, there's still a risk that it could reverse. So we need to stay reasonable. You shouldn't joke around with the market because you always have to play chess with the market. In fact, you're playing chess against other traders who are hundreds of times smarter than you. That's why it's very hard to outsmart the market. So you just need to be prepared for scenario A, scenario B, scenario C, and so on. All right, friends. Last time I talked about the DXY, that is the dollar index. Do you see what's happening right now? After this drop, we're now seeing a pullback. Awesome. So accordingly, the euro should react a bit to this pullback. Let's take a look. So the euro was at 1.17, and as you can see, along with the DXY, it's also starting its correction. If I set up the chart like this, with the DXY on one side and the euro on the other, you can see that at the point where the DXY is on top and the euro is below, let me make this one a bit bigger and this one a bit larger too. There are two important crucial indicators here. DXY is essentially the strength of the dollar, and it has hit its lower boundary. The euro has also hit its upper boundary. The euro has come right back to 1.18, 1.18. That's a lot. Look at this crazy growth. And at the same time, look at the wild drop that the DXY has made. They correlate with each other proportionally. And accordingly, if this trend on the DXY, this huge downward trend gets broken, then that trend will be breached. And what's inaccurate about it? You see, we need to at least make a slightly new high. Only then can we say that the dollar is turning around. Friends, just a reminder that we've created a completely free course where we teach our strategies and provide step-by-step strategies for free. So head over to our YouTube, check out our courses, try out our trading algorithm from the bot, and happiness will be yours. Peace to everyone. Bye.